we're going to close the conversation just there now because it's making too much noise. Okay, so we're going to start with a couple of words from our hosts. Stan, Mindspace. So this lovely office space and the event space that we are is Mindspace area. So Sivan, give us first.
Welcome to Mindspace. I'm Sivan, and lead for the sales department here in Israel. Mindspace is an Israeli company of co-working spaces. We have almost 50 sites around the world, which 10 of them are here in Israel. We have 3 sites in Tel Aviv, one in Herzliya, one in Abuta, one in Kibbutz Yakum, and we recently launched 3 more sites in Kiryat Ono, Petah Tikva, Haifa. We're gonna open another site in Montana at the end of the year. Our contract is monthly and flexible. It includes everything. If it's in event spaces or meeting room or kitchen, free Wi-Fi, free coffees. We have happy hours on a weekly basis. We have Pilates classes and gym and a rooftop. We do benefits and collaboration for our community. And all of this is included in one invoice. We are happy to have you, and we're happy to offer you a free day pass in one of our sites here in Israel. All you need to do is scan the QR code and enjoy one of our locations for a day of trial. That's it. We're happy to have you. I have some cards here with my information if you need some more information or have any questions. And enjoy your day.
Perfect. Thank you, Sivan. So you have also the QR code here. Okay, we're going to start with a short overview of what was in FinTech. I'd like to invite Neil Nesser, the chairman of FinTech-Aviv, to give us like a short overview about FinTech. What are you saying here? Okay, wow. Good to see everybody. Welcome. Very nice being here again. Our last summit was the annual summit back in March. Now we're more than a quarter into 2023, and we can basically summarize Q1. So just first of all, thanking our sponsors, Mindspace for hosting, and you guys for coming. And let's jump into it. So global fintech funding in Q1 23, as we see, basically global fintech funding is still in descent. We have Stripe still with $6.5 billion, which is quite unusual. But other than this, global fintech funding, and as we all know, in terms of the global recession and the global economic state is descending. So we see that every major region saw a double-digit drop in funding, except obviously of the US. It's a single digit, actually it's 1. So, US somehow managed to maintain its position with fintech funding, but the rest, both Europe, Latin America, Africa, Asia, is in the same. But we're in Israel, basically in the MENA region, Middle East, North Africa. And this report by McKinsey showed us that actually in the MENA region, we're seeing a nice number. We're witnessing a nice uptick, and this is quite encouraging. And the revenues of fintech companies in our region expected to triple by 2025. So this is kind of encouraging to understand that we in the MENA region kind of in a good situation compared to the rest of the world. If we focus in the MENA region in Israel, we are definitely the fintech hub of our region. We are still the largest and most advanced startup hub. And actually, by a report published this Friday, we are 5th in the world in terms of fintech hubs. After Silicon Valley, New York, London, and LA, it's Israel. Then we see Boston and Beijing in 6th and 7th place in terms of being a fintech hub in the region. So let's take a look at what happened to fintech funding in Q1. Tech funding in general. Israeli tech funding in Q1 dropped comparing to Q1 2022. It's a 70% drop. So still, we're not in a very good situation. This number is very low. Actually, this number is 10 of the number of global tech investments in 2022 in the whole year. So we have here 10th. It should be around, I would say, multiple 4 on this one, 6. It should be around 6 in normal days, but these are not normal days. Number of deals also declined, 112 deals only, and it's the worst number in more than 3 years, and this is general tech. And these companies actually got numbers better, and they are carrying the rest of the market with huge rounds, with $300 million round, eToro with 250, and Via with 110. So they're in charge on about a third of what we saw, the 1.7 general tech. And as we know, eToro is a fintech company. And if you dive into the numbers of fintech companies or the fintech space in Q1, so we can see that we have 49 operating hubs in Israel, fintech hubs. We have 410 companies according to Startup Nation Central and our friends there. This is excluding cybersecurity companies. It would take including cybersecurity companies that are dedicating their innovations for the financial industry. This number will probably double itself. Then we have 70 active investors since 2021. Investors mean venture capital investors and not angel. With angels, we have hundreds and hundreds, if not thousands. 14 investment rounds, we saw the numbers, and 400 million in 18 in funding total. This is for Q4 and Q1. So we see that the level of fintech activity decreased to 400 million in total. That's raised for the fintech companies. Of course, leading the chart and taking the numbers up is eToro. And the subsegments of fintech that track the most of the investments is trading, payments, and money transfer. And we can see the numbers. These are the numbers of transactions, of rounds. So with these numbers, I want to thank you for joining us, taking it to the next panel. I hope you enjoyed the day, and I see you later on. Thank you very much.
Thanks, Peter. Okay, so we had an overview about what happened. Next, we're going to start with our payment panel. So I'd like to invite Tal Miller, who will be the moderator. Tal is the CEO of Fibonacci. Tal, where are you? Perfect. And with him, we have Moshe Kimchi, CEO of Nima, which we today learned that we studied together. Perfect. Omer Hungar is the country manager for MasterCards. We have Noah from Unifast, who's the VP of Business Development, and Eyal Shimoni, EVP Product from ICE. Everybody are here? So we put your pictures so it'll be easier for you to know where you is. All right, so we have 2 mics. So you'll have to share and go.
So, first of all, thank you, Tom, for the introduction. And we're the first panel for today, so we're going to try and make this as interesting as possible to get everyone in the mood. We're going to have some interesting discussions, a lot of topics that are bothering a lot of people and are interesting for us, I guess. I want to start first with you, Omer. MasterCard is a global company. You have basically reach in almost every country in the world. And I wanted to get your take on what do you think are the biggest challenges for payments today in the world?
Yeah, happy to. So good morning, everyone. Happy to be here. Many challenges always for payment technology. I mean, we still need to solve, the friction in present transactions. We can, there are some regulations that we still need to embed. But for me, top of mind and the biggest challenge as payments become more and more digital is actually cyber. Financial institutions. MasterCard is not a financial institution, but us, as well as our clients who are financial institutions, are the entities that are most attacked, of course. And usually, us, of course, and banks as well, especially banks in Israel, are well aware of the cyber risk and protect themselves pretty good. But it's not only about issuers and acquirers. There's many companies along the value chain of payments. And I think that right now, one of our biggest challenges to continuously map all those entities because business model evolve, the type of company that are taking part of payments evolve, and not everyone comes with a DNA of compliance. So we need to continue and map it. We see ourselves as an ecosystem company. And I'll give you a short example. If an insurance company or even a coffee shop downstairs that does online deliveries, if they're hacked, eventually what's being lost is identities. In Israel, identity theft is not yet a problem, but what also is being lost and what everyone is worried about is credentials, the card details. Now imagine that you see fraudulent transactions on your statement, or your issuer is calling you and telling you your card was exposed. Is that it? We will send you another one. Today we're doing digital issuing, but so if it happens once, okay. If it happens twice, if it will happen 3 times in less than, I don't know, half a year, you will start to lose trust. And trust is MasterCard's biggest asset in payments. So this is why we're continuously monitoring for cyber risks, all of the ecosystem, the banks that work with us, their merchants. So I definitely see this as the biggest challenge.
Yeah, I know we talked earlier, and I know that this is a topic that you have a lot of things to say about. So I think in specific, how do you reconcile between security and convenience for the customer? I mean, at the end of the day, we want to have a process that is secure and as risk-free as possible, but also not to cause customers to run away and choose other payment methods.
Exactly. Seamless payment is the key for high conversion rate. Okay, so on one hand, like Omer said, you must ensure the security of the transaction. And the cardholder, we as the consumers, we must feel very secure in our payment method. Same for the merchant. The merchant needs to know that he will get the money, he will be paid. There will be no leak of information from his terminals or website. For that, there are companies like Hive, who are PCI clients, who most of you aware of. And we're doing the tokenization for the merchants. The merchant is not allowed to keep the cardholder details in his terminals or in the street server. And we convert the card numbers to tokens. Okay, so the next time when we as a consumer doing the deal, we convert it there, forwarding the transaction in the acquirer, and in that way, we making another progress in the secure without affecting the convenience of the payment. But having said that, we as a consumer, we are willing to pay a fee for the security. And I mean for the 3D secure process. For those of us who are not aware, when we're doing an online transaction, in some cases, the issuer decided to challenge us. And he wants to make sure that we are the cardholder, we are doing the transaction. So he's challenging us to put a pin so that he's standing up. It's a hassle, right? But we as a consumer, we're willing to do that, willing to do that for our own security.
One of the things that Omer mentioned is also the different models that we are seeing today, different both I would say payment models, different payment technologies, different even shopping and consumer models. I know this is something that Unipath is dealing a lot with, so you can elaborate how you see things and how things are emerging in the last couple of years.
I'm Noah, and I'm from Unipath. And just to say this, the context of Unipath is an embedded payments platform that helps B2B platforms and marketplaces embedded payments very easily. So we can enable. Sorry, please speak up. Yeah. So they can enable their SMEs, their end users,
basically use payments much seriously. So we're embedded finance solutions and fully white label. And well, I'll speak about embedded payments approach maybe later on, but I wanted to highlight a few new technologies or approaches in Unipass were implemented. So it's everything related to faster payments. Okay, so while my fellows here are talking about the payments, secure payments, which is something that we're dealing with, we're also PCI compliance, etc. But we are trying to see, especially for our end users that are SMEs, the cash flow for them is crucial. And they have a lot of technical difficulty. How we can enable them to get paid faster. So we're today we are using the open banking technology in the UK. We are regulated by GSA, so we are currently focused on the UK market. So open banking, while it's still a new technology, it's still evolving and emerging. The users that are using open banking transactions, we see that they are getting the money to their bank account within 10 minutes. And same means when you're talking about SME that needs the money today in order to survive this week or tomorrow, to get paid in 10 minutes as opposed to 3 days, it's something that we are seeing as something very, very important for them. We're also
Sorry, 1 second. It's hard to hear, so you need to put your mic a bit closer.
yeah.
Sorry.
No, that's fine. You can hear me now? Okay. Good again from the start. No, but basically, so yeah, so open banking is really a technology that we believe in, still evolving as I mentioned, but we see it's something that with time will be more and more easy to use, and obviously will ease on the end user to get paid faster, and we see our end users. So I'm repeating a little bit just so we understand what I was talking about. Our end users are getting paid in 10 minutes. So it's really important for them. Another interesting technology that we implemented in our system is split on hand. Okay, so while we are enabled multi-party transactions, we see that one of the main pain points is reconciliation, how to reconcile payments at the end of the day. And our ability to split and deduct the fees, split the funds, deduct the fees we're taking and the platforms is taking on time and not let the end user or the platform dealing with any reconciliation processes or manual processes is something that we see that helps them to get, obviously to get paid faster, but also to reduce operational costs and working hands around the reconciliation. Another thing, it's not really a like cutting edge technology, but it's a decision we take at Unipass to basically the time to reduce the time that it takes the money to being settled in their bank account. Well, many players are settling money of credit card transactions up to 7 days. We enable them the money to be settled after 48 hours. And in the end of the day, all of these components together enable our end users to get paid faster within 21 days before the invoice due date, let's say. So I think it's something that's a challenge, and we're trying to see the results.
Okay, thank you. You've mentioned open banking, which is definitely a very interesting, I would even say sexy development in the recent years. But still, I know that banking is a very big challenge throughout the world. There are a lot of unbanked people that are struggling with banks. There are even more people that aren't happy with their current banking solutions, whether these are customers or companies. And Moshe, I know that this is something that you guys are on the crusade to try and fix. So how do you see this?
Hi, everyone. So you're right. You can say the bigger the pain, the bigger is the weight of fintechs. Because I truly believe fintechs are the solution for responding to these pain points in the financial world. There are more than 2 billion people around the world that are considered unbanked. And as a profession, you can count at least 270 million people that are considered migrant workers. So migrant workers are typically characterized that they have very struggling with opening a bank account. So it's a subcategory of the unbanked, which you mentioned. Some of them use cash, obviously, but most of them, you'll be surprised to hear, use digital accounts, especially in emerging economies, in Africa, in Asia. These are very common and growing solutions for these communities. Actually, Nima created the first digital account in Israel that provides a financial solution for those migrants that came to Israel. From the first minute that you need to deposit the funds, and then you need to send the money back home, and then you want to use the rest of the funds here. So we provide also a payment method, Visa card. So we'll have other solutions and P2P transactions. By the way, all of these services you can find in the traditional banking system. Right, so what's the catch? The point is that these clients are unbanked. They cannot open a bank account, or it's not easy for them to access the traditional banking system. And that's exactly the point when fintechs find the solution. Add to that the lack of language, the high cost in the banks, which actually pushes them away from the traditional banking system. But this pain is not a pain that is reserved only for the migrants, especially not in, you can take Israel, for example. There are many Israelis that are underserved. This is another category on the, let's say, unbanked, but there are a lot of Israelis that are underserved in the financial services that they acquire every day. Let's say I want to transfer money today in 2023. I use I have at least 2 bank accounts in the largest banks in Israel. I want to send money, let's say, to Spain or even to Asia, to the Philippines. What has been offered in the bank is actually a SWIFT system. Without even knowing, every transaction I made is going through the SWIFT system. And this is a very expensive, limited, old-fashioned way to transfer money in 2022. So not only migrants are unbanked, but also Israelis and many other communities around the world are underserved because the level of service that they get is not sufficient. If you can compare it to Nima, so if I use the Nima account, I can transfer money not only to bank accounts. Bank accounts is one layer of remittances. In 2023, and Omer maybe can add to that, there are many alternative as a payment method. People transfer money not only to bank accounts, they want to transfer money to cash pickups, they want to transfer money to wallets across the world. And this is something that you cannot get today in the traditional banking system. So I used to be underserved as well, but now I'm not. I have my Nima account, so I use it pretty often. And I think that's the beauty. You can be digital. You can be provide a solution to a certain pain. But I think all of us need different solutions today. We see it in many other aspects, say in interests, right? But the payment, the cost that we pay in ethics and transactions are extremely high. And this is where we find the solution and the crack that we can provide added value to our clients, not only migrant, but Israelis as well.
I'm going to ask something that might cause some post-traumatic triggers in the audience, but we're in 2023, so everyone's forgotten about COVID, but at least until the next time. But it still had a lot of impact, especially in the banking industries, because I know that a lot of the banks, everybody felt it became more conservative, less appealing for people, less serving. Have you felt this as well?
I think all of us felt it.
and we still do, right? Maybe it's the post-trauma now after the COVID, but you can still see the trend that banks are becoming more and more digital, or at least they market themselves as digital, and they're closing branches. They shifting the way they used to serve the clients. What we actually noticed during COVID, if we saw, let's say from 2015, can say that Nima is in business, most of the transactions were made into direct to banks. And I'm not talking about transactions from Israel generally. So you see from 16, there is a shift changing gradually, but on 2020, we saw a huge peak in transactions that are shifted to an alternative solution, such as digital accounts. Take China, for example. Most of the Chinese beneficiaries would prefer not to receive their funds into China banks. They would want to have at least some of the funds received through China UnionPay, WeChat, Alipay. So we realized that actually what we just spoke about, the underserved clients globally, when they come to the bank, they have only one option: to send money to banks. And then we realized that all this network that we built during the years is actually an asset. And I completely agree with Omer. One of the main things that you need to maintain is trust, not only on Mastercard, but especially on fintechs, by the way, because we're not backed by Mastercard, right? We're fintech, so it's extremely important. And what we did is actually we launched an API product for financial institutions and for banks that understand that the trend is moving funds from banks to bank, from bank to bank, but from digital accounts for an alternative. It could be cash pickup, which were extremely common during COVID because people were limited. They needed the funds, right? They needed to deal with money. So they preferred cash pickup because it was more accessible. You can also see data of the cash usage in Israel during 2020 and see that the cash increased in Israel. So we actually developed this API solution for financial institutions and banks that now can implement the ability to transfer money not only to bank account, but also to an alternative payment method, advanced payment methods such as cash pickup, wallets, and these services actually are so much convenient, and the transfers are done in real time. This is extremely important. Noah just spoke about 48 hours, 72 hours for merchants, but individuals want to receive the money in real time. And the only way that can happen is in real time payment with wallets. We also support bank accounts, but that's really old fashioned.
I think you hit the nail on the head by saying trust, because without trust, you can't maintain a payments ecosystem. And in times of trouble, the trust is one of the first things that start to deteriorate. I think one of the biggest influencers on trust is regulators, which you mentioned, Omar. Regulators are responsible for, or at least should be responsible, in my view, for maintaining this level of trust with consumers. How do you see this developing? So are there any global regulatory trends that you guys see?
Yeah, first of all, I just want to go back to what Mark spoke about. I think offering financial services to the underbanked, it's not only a business opportunity, it's a good cause, and there are plenty of research, including research that we do, that shows the positive impact on the entire economic situation. And I'm very happy to see that this is evolving. Those underbanked people, one of their needs is to send money abroad, so it's beautiful to see how Nima develops into offering solutions for this as well. Regarding regulation, so I'll speak on a mix between what we see and what we would like to see. And I would dare to say that it's not that far away. So I want to speak about two things. First of all, harmonization of regulation, and then introduction of regulation. What do I mean by that? So let's start from Israel. Israel is a very small market, relatively, and it developed through the years in a unique way that has advantages and disadvantages. For example, merchant-funded installments, which is now called the NPL, and many companies raise a lot of money, exists in Israel for decades, including some loyalty mechanism, including some strong customer authentication mechanism. All of them were invented here, all of them very local, all of them were good for the local market, up to a point where it became a little bit of a bottleneck or a barrier for innovation and competition. And I'm very happy to see that the regulators in Israel in the past couple of years are pushing it towards a more international standard. So we saw this with the EMV migration, after we were big part in this, and then we saw Google and Apple coming. We continue to see this with the strong customer authentication. What was adopted here in Israel is just a fraction of what exists in Europe, but it will come, I believe. But I see that the regulators really, doubling down on this. And when we talk about open banking, and I was happy to see Ilanit here in the crowd. What Ilanit is doing in Israel, she's leading a work based on the Berlin Group standards, which means that from day one, it will be international standards. It will make it easier for Israeli companies to develop things here and to offer them abroad and vice versa. And recently we saw an exemption introduced by the legislation that a FinTech company with an OECD license can work in Israel. I'm surprised by the amount of attention this exemption brings and the amount of companies that are taking interest in the Israeli market. And this is, to me, a direct result of making sure that there is, as much as possible, the same regulation everywhere. And it's especially important for a country like Israel, and it continues with faster payment, with ISO 222, and so on. So this is the first thing, to harmonize the regulation. Second thing is that there are areas where I think the market wants to see regulation, and main area is crypto, of course. When there is no regulation, there's a lack of trust. There's things like we saw when companies take money of investors and customers and collapse eventually. And I understand why regulators are taking their time. It's very, when a regulator is introducing a regulation, also taking a little bit of ownership on the space. So they're doing it slowly, but I think it's very important because the technology, the underlying technology, without talking about Bitcoin as an investment opportunity, something completely else. The underlying technology in blockchain has a lot of potential, and we see also central banks talking about CBDCs, etc., including Bank of Israel, who's very advanced in that. And we will see stable coins and maybe CBDCs like digital euros and maybe the shekel here happening only if there will be a regulation. So there are certain areas where regulators will create the market. And if they want to introduce regulation, then it might remain in the shadows, which is not good for anyone.
I know we deal a lot with different merchants, different industries. So the general consensus about regulators and their role is a bit non-existent. Some people think that regulation is a good thing and it helps with the merchants' needs and it helps stabilize this industry. Other people look at regulation as something that prohibits growth and actually kills innovation. And I know, you're dealing with a lot of companies from a lot of different fields and areas. So basically, anything that sells in Israel, do you see any underlying needs of companies in particular industries or across the board that you see them evolving or changing in the last couple of years, or what is the future trend with merchant?
Maybe we'll take a few words about Hype. I think it's Hype versus 4, and we say Hype, although there's no E at the end. Hype is initiative of handling your payment. It's a merger of 4 companies, 2 payment gateways, 1 terminal vendor named Speed previously, and the 4th company is Digital Industry. Basically, what we do, we're enabling merchant to accept payment which are not cash or check. Okay, so alternative payment methods, Google Pay, Apple Pay, Bill, Paybox, credit card, of course, and any new payment method that we enter the market, we will probably support. So regarding the changes in the merchants, so what the way that they accept payments. First, we see the online and the physical worlds combining. Merchant or small merchant that typically sold only physical stores. They don't want to open online store. They want that the cashier merge the online store. They want to manage the warehouse, okay, from the same spot. And they want to be able to do reconciliation of their sale. Okay, they're selling in different platforms, and they want to make sure that they're receiving their money. And we spoke about here the complexity of getting paid, or the different method of getting paid, and the different ways of any payment method in the settlement, making it almost impossible for the merchant handle that. That's why we have companies like iPhone and Payment Gateway to make it more simple for the merchant. And we are fine with the complexity. That's our job. Okay, so might it be more complicated. Okay, there are account-to-account payment, maybe cryptocurrencies that could enter. That's good for us. That's it. And regarding the NIMA, like the one. NIMA and companies like NIMA solving the problem not only for the unserved population, they also solving the problem for the banks. Someone who established and managed the bank activity in China for 8 years. Here in Israel, we didn't want that Chinese employees to enter their branches. They cannot support them, cannot give them service. They need 50 people that speaks only Chinese enter to the branch. In example for service, you cannot serve the other people. So companies like NIMA, they're not disrupting the market, they're helping the market.
I completely agree with some of your points. I think the biggest challenge we see for merchants today is one, how they can move from being a physical store to being an online store or an omni-channel store. The second thing that you've also mentioned is how they can reduce the complexity because they are not experts in payments. That's why they rely on companies like that. I think the third most important challenge that I see, and I know Noah, you're going to agree with me on this because I know it's your very interesting topic for you guys. It's embedded payments. How we can turn companies that may not be fintechs right now into fintechs or adding this payment capability or disadvantage.
Okay, so it has a lot of faces. This kind of buzzword, embedded finance, embedded payments. So just to align, so embedded finance is basically how we see unified, because everyone has its own translation for that. So how to bring financial services or payments in the right time, in the right context. So the platforms we are serving can implement it very easily. And our customers are not fintechs, they become fintechs after we implement our solution basically. And how their end users can really use the payment solutions in their current flow, the current system, day-to-day management system without needing to go and look for any solution or third-party solution. So this is our approach and how we see it. And basically, we enable. Today, we are embedded finance solution, but today we are focusing mainly on the payments side. Basically, we enable our customers very easy integration. Okay, not everyone wants to be with the heavy integration that takes 1 year or so. So we kind of build a very easy technology to use and implement. So it is very easy for them to become experience without the hassle. We are the regulators and what the risks and liability in us. So they don't need to deal with any regulation. Let's say it this way. Let's put it this way. And integrating or collaborating with us, they're able to start monetize, I'm sure that part of us are aware of the movement from SaaS to payments. Okay, SaaS became very competitive. It's very hard to increase the prices. You see, in fact, see a lot of companies increasing subscriptions, prices, etc. So, payments is really a nice means revenue generation channel for a lot of SaaS companies. And this is a strong connection between us and our customers and our markets. But I wanna elaborate about the end user. I think it's one of the most important things here, because if we enable digital platforms to implement payments very easy and fully white labeled, by the way, the brands is key, because if they introduce their own payment brand under the brand and their customers trust, we see the conversion. In fact, we see more than 80% of our end users are new to digital payments. They were never used any digital payments. So this use the outdated bank transfers, cash, checks, and now when they see a brand they trust, they adopt the service. They're willing to adopt the service. And when they can find the right service they need at the right time, within the current flow, let's say accounting software, the end user need to raise invoice. If they can embed payments very easily, they can get paid faster than that, and don't need to go and be redirected to another third-party provider and then to do the KYB, KYC. And there's a lot of frictions there. And then to get back to the system that under day-to-day, and then to complete this payment, we can decrease the friction there. So but how to see embedded payments at the times. Usually, the ability to orchestrate many providers behind the scenes to bring the best of breed for our end for our country. One integration, and the more financial services we have, the more financial services they can their customers, and by that increase lifetime value, stickiness, etc. Again, so
Thank you. I can sit and talk about payments for like 3 days, but Charlie's already making angry eyes at me. So I think our time has exceeded. I'd like to thank everyone for, first of all, thank you guys for your attention, and thank you guys for the insightful answers. Thank you very much, Noah, Moshe, Omer, and Eyal, for great insights. I want to thank all of you for being attentive during this session. And okay, for the next session, I'd like to host Italian from Pioneer. We have a lot to talk about. So I'm not going to be as lovely as our former panel. So if you make noise, I'll take you out. Is that okay? So in the back, I know you're chatting and it's great, but it's really hard for the people here to listen. So there's a lot of room just outside of this door that you can talk and come back and get a breather and come back. Okay, so Michael is Senior Director, Country Manager, Israel, and the CIA for Pioneer. Hi, Michael. Welcome.
Yeah, hi. It's well known, okay. For some issues.
Perfect.
Yeah.
So as we learned, we need to talk close to the microphone.
Yeah.
And guys at the back, please, if you're chatting outside, because we hear it very loud here. So Michael, maybe a few words about yourself, about like a lot of people here know about Pioneer, but briefly maybe. So they'll just listen.
Yeah, okay, so usually in Israel, Pioneer is considered mostly as a great place to work in. As one of us know, we see jobs posted by Pioneer. But lately what actually happened is obviously because of the new legislation, we started with our operations in Israel anymore. So this is why also I became countryman of Israel and CFO. since beginning of the year.
So, okay, so maybe your focus maybe on, wait, it's really hard. Excuse me, at the back, I'm sorry, it will be very appreciated if you could be outside and chat. We hear it very loud, it's very hard to concentrate. Okay.
Right. Well,
No, we can skip around, but, yeah, okay, sorry. So, let's talk about cross-border transactions, especially from Israel, especially multi-currency, very problematic for a lot of companies. So how do you solve it?
so yeah, so Payoneer exists from 2005, something like that, went public in 2021, Nasdaq. And since the beginning, Payoneer was developing funding infrastructure. Like we're not bank, we're an American fintech. So that also allowed us to work a lot with different banks around the world. And obviously the top banks that exist, let's say Bank of America in the US, Barclays in the UK. We can talk about Citi as well.
So you're helping the cross-border transactions, and is it with a local bank account, or is it your account that you're building out of like an e-money account? How does that work?
So yeah, actually Payoneer holds bank accounts across the world. And we are providing bank account numbers for receiving accounts to our customers. And each one of them is unique. So basically you're receiving the actual bank account number to receive funds across the world in different currencies.
Okay, got it. So it's very easy. I wouldn't say easy, but it makes life easy for companies who are local to grow outside. Because for me as a company, opening an account in the UK will take me, I have no idea how much effort, but a lot of effort.
Yeah, let's talk about that.
And that's like a progressive market. If I need to open one in Ethiopia, it might be even harder. So how do you help the local companies now they're growing outside, especially from Israel? A lot of the Israeli startups are doing this transition. So where do you fit in and when?
So yeah, we've actually understood that many companies, Israel market is very small. And we have huge amount of startups in different fields like, I don't know, even fintechs as well, right?
Yeah, open on here started with, there are about 410 fintechs, and this is like a growing number, but in general, most of the 90% of the startups here are focused on global markets.
Yeah, this is the thing that this is what's interesting actually in Israel, that all the startups that are started to grow, they already from the beginning they start to think worldwide and not internal markets. And this is the beauty of the thing. But obviously there are a lot of obstacles. So in order to open a company, let's say in the UK or in the US, it's really sometimes it's even can be done online. But then you need also a bank account to support this international activity. This is where the actual problem comes up. To open bank account in, for example, in the UK can take up to 3 months, sometimes 6 months. And you also need to be present.
If you're approved, like it might be rejected and KYC process, okay.
Yeah, but again, Payoneer does the same KYC processes, we're an international company with e-money licenses, we're licensed all over the world. So, we're not making the KYC processes either, we're just making it more efficient and faster.
Okay, so we talked about opening bank accounts and the various corridors, right, that you operate. But at the end of the day, outside of the bank account, what type of solutions or services do you offer? How do you assist startups or companies even after they have the account with you?
Yeah, great question. So as I said, opening bank account is very hard. So first of all, we're providing these type of receiving accounts that are actually look like any regular bank account. You can get many bank accounts from Bank of America, Barclays, all other as well. In addition, for let's say smaller companies, we also allow ability to bill their customers. just, they just send payment requests.
Repetitive payment request. Okay, because that's a problem, because you're talking about, if I'm not using a card where it's easy to make repayment, if I'm using bank transfers, I always have this question, will he pay me for the next month? So I can have like a full kind of
Yeah. So payment requests are also, you can also set it up like that, with reminders, recurring, requests. You also have ability to add invoices to it. Looks like, even for small stuff, it's very serious.
Okay, great. So what is in the future for Daniel? What do you plan on next big thing or next product that you want to share? It's a good place to do an unveiling if you have, so.
Yeah, well, the revealing actually was done already, but only in Hong Kong. So the next product we're aiming.
So brace yourself, we have an unveiling here today, right? Yeah.
Kind of. Yes, so I really hope that soon enough we will also come to Europe and the usual new product as well. It's called Pay and Checkout. So if until now we're mostly focusing on the B2B transactions, this time we're finally starting to focus also on B2C. We recognize that many of our customers who work with Amazon, eBay, other marketplaces, and by the way, all these marketplaces are our partners, which is something I forgot to mention. So in addition, let's say we're talking about e-commerce services, in addition, they also have their own stores. And we already work with them, and for them will be easier to add this payment feature in the future to receive payments from the stores as well.
This is going directly in the same trajectory of the market being consolidated. So a lot of the fintech products are being consolidated to one platform. Because if I'm already working, and we heard this also in the last panel and here, and it's something that we hear all the time, trust is the main issue. So if you already have the trust of your client and you're already working with them, I'm not even talking about non-financially. So it'll be good just to add the additional features. And you build it yourself using third parties, and the startups here can approach you and maybe offer you a new
It's a possibility. Everything is possible. This is why I'm also here, also to communicate with colleagues. And by the way, we also have, I'm here, and we have also Eli, our partnership manager for Israel here as well. So you can approach him too to ask more questions if it was interesting for you. But in overall, I think the main goal for us is becoming one-stop shop for all Israeli companies, and there will no need to go and find any other company to work with their cross-border payments.
Okay, got it. Wonderful. All right, anything else you want to share with the audience? Or
just a
question. Anyone, if you have a question, we have one question. I'm giving you one question. No? Okay. So it's hard, man, you're well known, but okay, wonderful. Thank you very much for sharing. I'm looking forward to see you, continue growing. And
it's not the first time we've done.
No, of course not, but I'm saying it's like it's really in this. So if you have any ideas for Daniel, reach out. Perfect. Thank you very much.
Thank you.
Yes, yes, please. So from payments and cross-border transaction into financing, right? So our next panel, I'd like to invite Nir back to the stage, who'll be moderating. And we have a long time partner. We have Ilanit Madmoni. I think she's beside Nir and myself, she's been here the most. So Ilanit is the head of innovation of Israel. Uli, are you here? Right? Uli. So we have Uli and then CEO and founder at the USA Mortgages. We have Erez is talking here. Erez? I think he's outside. Okay. And Itamar Hassan, SVP at the Pagaya. Itamar? Oh, perfect. So I'm gonna grab. Okay, you start. I'll grab. Okay.
Thank you, Tal. Thanks everyone for staying for the lending panel. Here we have Eres with us, Jonas. Thank you, dear panelists. So before we start, maybe we'll go with just around the table to introduce ourselves to the audience. Who wants to start? Danny. Go ahead.
Morning, Nick Money, I'm the head of operation in partners.
Moving.
Hello, good morning, everybody. Thank you here for inviting me. My name is Uri Oden, and I'm the co-founder and CEO of USA Mortgages. We're a fintech lender in the United States. We lend to foreign nationals in 18 states in the United States. Real estate play interesting times. I'm sure later. Thank you.
Hi, my name is Derek. I'm the CEO and founder of Crisco Credit Risk Community. Founder in 2015, we work in the US, Mexico, Australia, and UK. We're doing technology and open accounting and open finance, enabling SMBs to share more information to lender potential creditor. And we opened last year as part of our group direct financing, MCA, for student capital, and we provide financing to directly to small businesses investors. Hi, thank you for having me here. It's a pleasure to be here with you. And my name is Itamar. I'm 31 years old. I'm a mathematician with a PhD in physics. I'm the SVP research at Pagayo. We're working on consumer lending, mostly in personal loans and also, but also in point of sale, buy now, pay later, and credit cards. We are working with investors and our partners, which are also in most and in the companies in the US, to generate more financial inclusion and opportunities for investors. Okay, thank you very much, dear panelists, for joining us. Aaron, I want to start with you from your experience as an alternative lender. And maybe we'll talk a bit about alternative lending and this space. What is the social impact of alternative lenders, if any? How do you see it? That's a great question. So sometimes we forget that the actual impact of what we do, and we only feel about the money, technology. Some people like the money, some people like technology. But the fact is that the financial inclusion that we do with FinTech able a lot more businesses and people to get access to services that sometimes seems to be very basic. I think Mexico we are in Mexico. In Mexico, 75% of the business don't have access to capital of the banks or any other institution. Another 20% get access just from small groups of financing, like 30 financing, maybe most of it traditional financing in Mexico, and only 5% get access to banks. We were able to provide impact by not just building all the business. They're able to provide financing, to provide solutions to business. If it's a digital bank, if it's digital lending, I can give you two examples that we have on our website, success stories. Liliana, she's the woman, the late 30s, she wanted to branch out from one coffee shop to two coffee shops in the same city. Very successful woman, and she didn't have access to any funding from anywhere. We were able to provide her $5,000. That is $5,000, and her life and family life changed. This year, very much more successful. Just one story out of many that's the five impact. Very important.
So definitely, so underbanked and bank, they have access to capital, to loans, and that's great. And maybe we will address the mortgage industry. How do you see the mortgage industry turning in light of COVID-19? What was the impact and what emerges out of it?
What is COVID-19?
We forgot what it is.
Yeah, so basically, I think most of us forgot it, but the mortgage industry didn't forget it. It was one lesson for us, for the mortgage industry, and I'm speaking from a point of view of a lender in the United States. It was, first of all, a lesson for, it made all of us humble. Okay, we understood that we don't know a lot. Okay, it made a lot of question marks.
As a lender, we mitigate our risk from two major parameters. One is the personal behavior of the borrower, and the other is real estate. And Corona changed both of them, was game changing for both of them. So for us, it was crazy. So, okay, people, the real estate, people left the city. People stopped working from the office and went home. And it was a interesting time. Our AI model went crazy. We came back to doing things with pencil and old school. And mostly, I think it was a rehearsal, a good rehearsal for what we see now when the rates are hiking and everything is changing again. So life is changed and we're addressing that.
I guess the population adapts to COVID and also the tech companies adapts to COVID and it changes everything. And this is just in the mortgage space. Itamar, maybe you'll give us your highlights on the impact of COVID in the general lending space. Borrowers and lenders, what was the main impact there?
So obviously there's been a major impact. I think not only because of COVID in itself, but because of the market reaction to it that echoed and generated a ripple effect. So I separate the story to, let's say, three parts. We started with COVID, abruptly showing in China and then the rest of the world, causing a lot of tension, a lot of stress, a lot of concerns. Causing some unemployment, some people losing their jobs, and not being able to pay their loans. And it drove a very rapid tightness from investors, at least in the consumer lending market, I guess also in other markets. This stress caused a ripple effect that manifests itself in two ways. One way is that the governments and the policymakers in general, the central banks across the world, particularly in the US, and tried to resolve the issues of concerns by flooding the market with a lot of liquidity. On the other end, the government also generated a lot of stimulus for the borrowers. So we have seen a short period of time where the market was short, maybe 6 months, maybe the market was still showing a lot of concern from the borrower behavioral perspective, but the borrowers actually performed very well because of the stimulus. And then when this very good performance, low losses, high returns showed up, and the market was flooded with liquidity because of the government and the central bank's initiatives, many investors tried to get into the market. Generated a very highly competitive environment with a lot of liquidity, causing rates to drop, while consumer behavior still was good because of the stimulus. At some point, stimulus stopped, but liquidity was still very high. Investors were still very eager to participate in the market, and this caused a very sharp, again, like over a period of about 3 months, I think, we have experienced throughout the market, across all the consumer lenders, I think, a very sharp drop in returns, projected returns, very high losses, causing again a reaction by investors that pulled out of the market. At the same time, we've seen inflation coming and rising, probably again due to the same and liquidity flood that we have experienced, causing the central banks to generate more tightening. And now we are kind of back to square one from a financial perspective, because liquidity is very low. And we see, I can say from a guy's perspective, but this is probably a broader group. We see performance and losses reducing because of not stimulus for borrowers, but because of very small competition and much less than we used to have in the past, and especially during the stimulus period. Now the question is, what will be the investor reaction to that? Because liquidity is still very low, they might see performance being very good and flood us with liquidity, even though the central banks still not flood with liquidity. So this is kind of a wisdom of the past, but who knows what we know in the future.
Yeah, thanks for that, Itamar. And we also saw different, I think thanks to COVID, different lending possibilities for consumer lending.
point of sale lending, BNPL, buy now, pay later, and it's really on the rise. I think it got a good push and was easier to borrow eventually. And let's go and speak about a bit about AI and how this component involved with lending. We see generative AI on the rise. We see it touches and influence all industries, cybersecurity, embedded finance, and of course also payments and lending. How do you see AI tapping into this space? Will it make risk assessment easier or open the gaps?
By now, far as we know, there is no massive use for AI in the banks for lending. They are starting using models. There are a lot of papers regarding AI and lending. And once they use it, first they use it as a marketing credit. And I must say that all this noise is really annoying.
If you get into the door, you get shot.
Maybe lock the door and nobody will get out. We have AI for marketing credit, and there are some new models for credit scoring, and using not only financial data, but also personal data from for the social media, for example. We believe that, and for the first steps, we see that the banks are not using the models for doing the credit scoring, but for monitoring models, the linear models, the regular models. We believe in AI, and we believe that it can improve credit scoring, can improve marketing, make it more accurate, and maybe improve financial inclusion. But there are some concerns regarding privacy and discrimination, and we are concerned for it. And there is a interagency task force from the Bank of Israel, the Ministry of Finance, the Competition Authority, the Israeli Security Authority, the Israeli Market Capital Authority. I hope I didn't forget anyone. And we are trying to think whether there is a need for a regulation and when to put the regulation in order not to stop innovation and in order to make innovation more fairness. And we think it's very important in order to prevent yes.
In order not to be like Italy, preventing AI. Anything else to add on top of this? I'd be happy to. So I think there's a new movement today in the market. One that is the eager wish by every financial institution, including banks, to explore how can I use AI, how can I use it safely, and how can I embed it into my processes. And at the same time, we have the regulators, I would say universities, the scholars are just publishing papers after papers, how risky it is and how to control it. Now, right now, there's no collusion because it's still too young, but I think it's going to be some point in the near future that we're going to see like Italy starting to ban stuff. I saw a paper from a Tel Aviv University that was published that was, for me, as an entrepreneur, was very scary. It's all about what you shouldn't do, not about what you can do. And I think that it's important to remember that AI brings prosperity, brings more options, and brings technology, a lot of value to all of us. And I'm connecting to COVID-19 that we talked about in the previous question. We are still in COVID-19. It's been 4 years ago, 2020, but we are in the after effect of COVID-19, the high inflation, the status of the economy that we see today, direct consequence of the COVID-19 period. And AI is one of the tools that can actually bring us back to track, bring innovation and bring us as a global market back to a growth and a good. So I do believe, and I think that's very important to be positive about it, to nurture it and follow it. We get a lot of questions from almost every financial institution which we have access. How can we use it? What does it look like? What do I do with it? How can I make it safe? We try to answer it. Thanks for that.
ChatGPT can answer everything. Obviously, anything to add on this?
Basically, I totally agree with Anita about the regulation which is necessary in the state. But I think there is a thing that is already happening, and that's the efficiency role of AI in the lending industry. Lending is paperwork, and it's not efficient. There's a lot of people handling a load. And when you have generative AI, which does part of the process, and I'm not talking about the risk assessment, still that way, not down the road. But for now, doing most of the process with AI enablement is already happening, and that's the good news for the industry. Yeah.
Definitely. And last minute, we are doing AI risk assessment every day in Mexico State. So together with that, we still have someone called during the UN, so there's a bench that's still COVID or a woman. But we are using the risk assessment, and we do a lot of ways to the score. If it's quickly negative score, if there's a negative score, then we don't want it.
So that's an interesting point. And, maybe we'll touch the difference of credit scoring and risk assessment and the way it's done by fintechs, such as Risco, say mortgages, or comparing the way done by financial institutions. Itamar, maybe you can enlighten us on these different.
So the risk assessment by AI on Pagaya, the risk assessment is not completely automatic using machine learning models and AI. So I'm done with your point, but when compared to banks and traditional institutions, I think you need to understand the different drivers that drives a business. Not put the risk assessment aside for the moment. Bank, as opposed to fintech, is controlling two things that are very important in the lending business. One is controlling the funding, because banks usually take deposits of their general customers and turn those deposits into loans to other investors. So they are kind of in control of the volume. Obviously, there can be an issue like run of the banks, people logging out of a specific bank, and that particular case, they don't have control over funding, but usually this is not the case. So they control the funding, as opposed to fintechs, which usually rely on investors of some sort, and therefore they can allow themselves to have some hiccups and errors from time to time, banks, as opposed to fintechs, which really rely on their reputations to generate more funding. Second, banks control the flow of applicants much more, much better, because eventually, again, the applicants, the board are the bank's customers mostly. Again, with some exceptions, but this is the most likely case. While with fintechs, usually a fintech is trying to connect many different partners, getting as many lead sources as possible, and those lead sources are companies by themselves. They have their own policies, they change their policies from time to time, and this is causing again more changes, requiring a much better risk assessment. Much better risk assessment, much better diversification. Third point, which is again connecting to the other 2 points, I think pretty much sets the tone on whether risk assessment for banks is very important or some other operational heavy lifting more important. For banks, is the choice of most of the banks due to their limited funding capacity and many different potential customers to focus on the more safe part of the population. When you look at the ladder of risk, when there is a shake in the economy, the ones that are in the bottom of the ladder very safe and not very high risk, those usually don't move a lot. And if there is some non-optimal risk assessment, you might lose 10 basis points, 20 basis points, 30 basis points. It's not the end of the world. While if you are working, trying to generate more financial inclusion, like the fintechs are trying to generate, and you're up the ladder in terms of risk, And a small shake will cause you to be exposed to the bad risk assessment you've done. Combining all of that, if you have relatively solid funding and relatively low potential from sophisticated risk assessment to improve like 10, 20 basis points of return compared to the other losses you have, which are more operational, marketing wise, etc. It's much better, I think, for banks to invest the money on the operational heavy tasks. There are also other issues with risk assessment by banks using machine learning has to do with regulation. But this is time, I think.
Thank you very much. And the Erez, maybe we'll talk back to you with the global aspects of lending. You operate in different markets with your company, in Latin America, in the US market, in Israel, in Europe. How do you see the differences between innovation adoption in terms of lending in between these different markets?
That's a great question. Thank you. So I think the markets are hugely different. We sometimes we feel like we can run everything in the globe and we are global connected. And I've been working in Australia, UK, and the US prior to COVID in the same time. So 3 different countries, it's 3 different continents. It's been challenging. But COVID, I think that's brought a lot of the difference between different markets. Even for the basic, I don't know how many of you know, but in Latin America, Mexico leads the process, but also in Chile, Peru, Colombia, there is complete digital invoicing in the market. So every invoice issued by a business is digital and submitted to the government in real time. It means that even for the grocery you bought here today, this morning, the government already knows about it. It doesn't happen in the US, it doesn't happen in Australia or Israel. In the US, you actually don't report anything to the government, only the tax returns once a year. So this by itself creates 2 different markets from data point of view, completely different. Now, in the US, if you talk about startup, technology, innovation, that will accept you very nicely and will be eager to hear from buy. In Mexico, what are you talking about? Talking to me about business, how much money you make, how many customers do you have, where is the bricks, what's going on, what do you sell, what do you buy? But I think those changes are dramatically and created the influence of the key decision maker in the organization. So if I'm talking to a bank in the US, the type of question they will ask is how the AI works, how can I connect, how can I embed the technology into my place. In Mexico will be, okay, how do I make money out of it? How my customers see it, how the customer knows I'm not doing it fraud, how I might not be fraud by the AI. So those are very different questions that you need to answer in different ways.
Thanks, Erez. And Uri, maybe we'll hear about your experience in the US market. How do you see that we can simplify processes for the end borrower?
So again, technology is the lead for simplifying processes. So we saw that before when we started doing things digital and regulation supported it, and we started we act as a lender, as an international lender. And once when we gave a loan, we needed to notarize the things. We went with the customer to a notarize. And then we uploaded it online. Let's say we give a customer in Berlin a loan in the United States. So we need to have somebody in Berlin and somebody in the United States. Today we have notarized.com and we do everything online at a fraction of the cost and the time consuming. So technology makes life simpler and makes life better in many aspects. And I think we just began mentioning AI and generative AI. We will have a lot of good wins in our back.
Thanks for that, Roy. And Ilanit, maybe we go back to you. How do you see the different innovative lending solutions reshape the market, the ecosystem as a whole?
So we speak about our steps. First, open banking that was mentioned this morning. We are, I think we are the first country to regulate open banking for the credit for loans data. We mandate the banks to give the access to data about loans customers. And once you have better data about the customer, you have a better models for credit scoring and to check to assess the risk. And also we have the credit bureau in the Bank of Israel that every creditor, everyone wants to give credit and that's a license. Can reach the credit bureau and have some data about the customer. And I believe that this is the first layer, that about the customer is the first layer for improving credit and scoring and improving and to make it more fairness and precise to choose to lend and what is the price to make it fair. So our point of view is to improve the data.
Thanks for that, and definitely helps the open banking revolution, definitely helps the financial institutions in this space also to integrate different lending solutions and lending innovations. Itamar, what do you see, how do you see the biggest challenges of these financial institutions when integrating lending technology?
Yeah, so I think it's a very good question. We are struggling with that on a daily basis, trying to grow into cooperating with the bigger financial institutions. Learning from successes and failures, I think you need to recognize first what is the actual value proposition of those innovations for the different participators. So I'll give you just one example. We are cooperating with an auto lender, a very big auto lender in the US, providing them the standard product that Pagaya is providing, financial inclusions, more borrowers being accepted, improved, at better rates, etc. But when we look at in retrospective, why did they actually engage with us? Then it's very different from why other partners of us have engaged with us. The regular fintech partner that has engaged with us, what he provides to the market is also financial inclusion of some sort, etc. But the way the business model of those partners is usually to take fees from someone, usually the investor, sometimes the borrower itself, and they're making their profit through financial inclusion, generating fees and profit. However, when you are talking about traditional banks, etc., usually they don't make money off of fees as much. I mean, when it comes to lending, they make fees for other kind of products. When it comes to lending, usually they don't make their money off of fees, but they actually make the money off the actual coupon that they are charging for the loan. They have deposits. They want to leverage the deposits into coupons, interest rate, etc. So when you are suggesting financial inclusion and improving more people, where does the funds for those loans come from? From some other investors. So it doesn't really support the business model of the traditional bank. In the case of this auto bank, what turned out to be the actual incentive for them is that through the financial inclusion, improving more people, they will be able to convince the dealers that are usually sending the applicants towards them. They will convince them to send more applicants towards them, improving their core business. So they will be exposed to better population, and they will see better economic outcome for the regular applicants that we're doing. So we're kind of doing them a favor in the sense of increasing their reputation in the eyes of the dealer. So this is a very non-trivial kind of value proposition that only in retrospect, I think I at least understand. And so this is one challenge. You need to understand the value proposition, and it's for different traditional players, it's different. The second obvious challenge that we have with the traditional lenders and banks is the regulation that is, first of all, much more heavy on those. And second, I think there are concerns due to the last few years events that there will be even more scrutiny, and we need to be able to convince them if we want to cooperate with them, and if they want to do that by themselves, again, they need to convince themselves that the trade-off is worth them. They're going to benefit enough that it's worth the cost, the risk, the regulatory risk if they're going to face.
Thank you very much, Itamar. And We could speak about lending innovations forever, really, but we really need to wrap it up. But before we do that, maybe a piece of advice, Uri and Ered, the entrepreneurs on stage, from you to the entrepreneurs in the audience. How would you improve the penetration rate basically in financial institutions? What can work better when you try to work with financial institutions as a tech company?
I think, it's all about relationships. That's the key to everything in life, and especially working with FI, the financial institution. We're luckily backed by few financial institutions, and I think it's all based on relationship, which is a long time relationship. I just came back from Japan. Relationship is when I say long time, sometimes they say they want to meet you in 2-3 years from now, just to see how things are done before they even start to say hello. So it's all about relationship, and I think relationship is a starting point. I think what Tamar mentioned about having a clear value proposition is the basic when you come into the financial institution, because there's a lot of people in these organizations, and you need to find the right business, so the business owner for your business, and then have a clear value proposition of working with all of them. Eventually, the number one piece of advice working with them is creating trust, because these guys have a lot of deal flow coming into them, and they need to trust the person who's working with them. And one last thing, you have to understand what they need. Okay, sometimes I see a lot of people telling me, "Hey, I want to work with these guys," and there must be an understanding of a regulation and of a business ecosystem, what they need. Because if you don't really understand them, you won't be able to create a good relationship with them.
Yeah, fully agree. Ered, anything to talk on this?
Actually, I agree with you, everything you said. With all the AI and everything is based on relationship. Everything is based on knowing the market that you're selling into, knowing the competition, knowing what's happening, knowing what they need and what they're afraid of. And I think that the best example I gave is when you go to buy something, you're not the special, you're not the person who knows what to buy. You want to buy a chair, you want to buy a chair, you go to a chair manufacturer, you don't know how to make a chair, but you know you need a chair. But you assume the chair manufacturer knows everything about chairs. Maybe it's an example, but still the one I had now. When you come into a bank or you come into a financial institution, you should be the professional. You should know what you're selling. You should know what they need. You should know why they should choose you and not other services, and why they shouldn't do the same as they've done in the past 10, 20, 100 years. To make this value proposition very clear and transparent, just basic. Go make sure that if you don't sell to anyone, they will all understand what you're saying, why they should buy it from you, and what value do you bring.
Thank you very much. I want to thank you all in the needs, Uri, and Itamar for joining me. It was definitely insightful. Thank you very much. Thank you. Thank you very much. Beautiful, beautiful, everybody. Okay, so we're gonna move to a keynote session by Microsoft. What's gonna happen now is that I'm gonna invite Tex Ade, who's in a new specialist, and we'll have a keynote. While he introduces himself, I'll upload the information. So, Mika, let's start maybe some background about you, about what you do, and how about that.
Hi guys, thank you for having me tonight. I want you to see that everyone is here, listening and with energy, because we're trying to talk with the background, so bear with me for a few minutes. I'm confident for Microsoft Israel. I'm leading the business for Azure in Israel with a corporate account, which means I can work with banks, insurance companies, and some of the time with the fintech side or the startup side. So today I'm here to tell you about the revolution of the OpenAI and Microsoft. The presentation will deal with the side of the user Okay, they use it in the organization, in the banking, in the banks, or in the insurance company. And on the other side, on the development, okay, working with GitHub Copilot for that matter, or working with OpenAI, Azure OpenAI on your Azure account. And we'll start in a step.
Yeah, one second. While we do this, yeah, let's get everybody back to the room.
Sorry for that. Jonathan, I tried to be very intuitive and very very unique, and asked guys the picture comparison tool of OpenAI to make my first slide, and I was asking him to do it very funny and kind of an old school, and I wanted to be memorable, and that's what I got. Sorry for my friend, but kind of shitty slide, but you got my name here, you got my QR code here, you can scan it and we can talk later if you want to, and if you have any questions, but this is some of the risks of OpenAI when you try it for the first time, so bear with me regarding that. So I always contemplate about the fact that we're talking about the first data lake. Okay, this is the verse from old Egypt or some sort of like that, and we're not that far from that today, but the fact is that we're always talking about generate AI as a new innovative tool for businesses, for organizations. In some inner circles in Microsoft, in global corporation, they talk about the next 5 years as equal to the change in the past 50 years. Okay, that's how much Microsoft is betting on OpenAI as a game changer tool against the competition. The two segments here that spoke a lot about OpenAI, about business, about innovative, basically talk about the API economy. Okay, today it's all about open banking, about taking a conversation between two applications all the time, and we argue that OpenAI will open up the door for you regarding that for innovative with your customers, and we're going to help you to push that, and we're going to see it later on in your presentation. Just a fun fact, okay? The competition is changing all the time. We used to have banks that dealt with our accounts without lending, without investing. And today we see the competition, the tech competition, our tech competition, do that as well, okay? We've got Amazon for that matter that give loans, that pay credit cards, that helps people to purchase stuff. And the world's changing, so we need to jump on this wagon as well. Okay, bear with me, it's a very small font, but it's a research from IDC that was held by around last month, and he's presenting the impact of the recession, today's recession on some industries. The fun fact, or what's more important to see is that around the banking, education, the resource industry, utility, insurance, the impact is very low, okay? The impact, like, this is the highest number of impact, and this is the median, and this is the lowest one. So in Microsoft, we are always looking in the market because we want to try to understand what is the right place to invest our funds. And we see a great potential of working with those customers. That's why I'm pitching a lot to insurance companies and to banks regarding that, because we see our aim or our angle to get in the organization to sell more products on Azure. Basically, this is my day job, okay? I always try to tame the legacy software in banking and insurance company, trying to persuade them to re-innovate it and to make it more agile, more modern, to switch their products towards that direction. But as I see the room and I feel the sense of urgency, you're here, okay? We need to help you to get from here, like sending the early birds and conquer this dragon and help you with enterprise. I'm getting to the point with this old introductory about the funding. Okay, this is the we're updating our presentation all day long because we're getting more and more information from the market and from the analysts. And as you can see, in the past 90 days, still security takes the lead. Security for cloud industry takes the lead, but FinTech is on second place. The enterprise IT data infrastructure, which is a more predictable outcome to see, is only in the third place. So I urge you guys to reach out and try to figure out how to push your business towards the cloud with our traditional customers. And I have to have a funny slide, so I dare you to be individuals. Okay, so you have time. You need to push the customers to try the new stuff. Okay, some backgrounds about AI. Okay, everyone familiar with the phrase human parity? Raise your hands. No, yes. Human parity means that the computer sense that the other side against him is at a human level functionality, but actually it's a computer. Means that a computer right now can do, let's say, a machine translation or a speech recognition, which means it can hear a voice and gives an output in JSON file or with text, for that matter. Okay, so this is the roadmap until 2020. Okay, if you think that Microsoft started with OpenAI in the past year or two, you're wrong. We're talking way back. It's a big investment from the whole high-tech company because we see right now the fruits of this labor about a decade ago. Okay, I'm going to be very brief about let's say the mechanism of all what you hear about AI and ML and stuff like that. Okay, basically this is the evolution of the service. In the beginning, it was artificial AI, basically, which means that we were looking that computers will produce equivalent actions like human beings by themselves with their network of neurons. Okay, eventually they had another layer of the ability to learn and then to have a deep learning, which means to consolidate new knowledge and new calculations. And then came the Gen AI, which all you refer to as ChatGPT, but we'll see about that in a few seconds. Meaning that generative AI can take text or can produce text, or can take JSON file or produce JSON file in order to automate it, processes with customer or with your products, basically. Everyone familiar with the models of OpenAI? If we have a knowledge with that, we can go further ado. But I just say that ChatGPT is what everyone knows. It's the open source one which you can use on your web browser. But the three others are a Microsoft and OpenAI joint product, which DALL-E is the picture generator. Codex is for open text, and ChatGPT is for making let's say a computer or a text instructions which will produce the code. Okay, so what about the fastest adopted technology? Okay, if we manage to have seen about the popular breakout in the past decade, okay, we're talking here in granularity of days to get to 1 million users. Okay, so you see how we evaluated. Okay, eventually ChatGPT was 5 days. It was the world leader, but the most interesting fact is, what about acquiring 100 million global monthly users? Okay, so it took us 2 months. The former record was TikTok for 9 months for those who can't see the screen. Okay, so we're talking about very nifty stuff. Okay, just to conclude with the ChatGPT. So ChatGPT has a law degree, an MBA from Wharton University. Is a certified in public accountant. He can co-authored some of books. So we see something that is unusual for us. Just a quick notion for us in Microsoft, always important to see. This is Sakenada, the CEO of Microsoft. As you can see, the change in the stock started in 2019, which is very equivalent to the first boast of ChatGPT and OpenAI tech, which means Microsoft is all about that, and you can see it in the stock abilities. I just want you to know that Microsoft is not about being serious and about being a big American corporate. This is actually a chat notion from the first deployment of Azure OpenAI. And the most popular question there and got more giggle is if we're going to get it in dark mode. So we're all about giggles and fun and games. So don't take us too seriously. Okay, now you remember the last graph about evolution since 2016, but this is the main changes, okay? Since the beginning of the year in January, we acquired lots of abilities to deploy with OpenAI. And underneath here on last May, 3 weeks ago, on our conference, on development conference, which called Microsoft Build, we launched the Azure OpenAI, which means that your ability to have a studio to build your own OpenAI processes via Azure. And the data fabric, which means that you will be able to take any kind of information with an API and to produce it as a dashboard in Power BI or any other tool that you would like to use. Of course, Microsoft is always using the services on their own, okay? OpenAI is open for our usage and under the technology of our centers way long ago, and we only open it to the public use when it's ready to practice for customers. As you can see, this is the amount of usage only with Edge, with Teams, and with Office using the ability of OpenAI. I'm going to skip on that information, but everyone can see it on my shirt later if you need it. I'm presenting a movie just to show you the capabilities around Teams. Okay, I don't know if everyone here is using Teams or hate it. I really like it. But the basic idea of OpenAI is the collaboration. Okay, let's say that I was invited to a call that I won't be able to attend. Okay, so in After Effects, I can see who attended, who spoke. If I'm really looking to my boss, okay, I will try to look his syntax here and find out what is our main point that, of interest that he had, and etc. to save time and to have produced notes. This is an actual product that already runs. Everyone in Microsoft uses it all the time. The reason I'm showing it to you because it will take time to get the region for the regular usage of customers and partners, but if an insurance company will implement this tool, they're open for other stuff in open banking. They're open up for OpenAI, etc. So take it under mind. This is the one version for Outlook, but I will skip it because I want to get to what I said. What?
Don't skip it.
No, okay. It's not that interesting.
Very stupid. That's why I want to know what's happening afterwards.
Basically, the OpenAI generator can be inside the app itself on the client, so you can use it as your regular, your custom to do it on Chrome or Edge. But the fact is that it is within your tenant, so it's low, so it will not be affected the organization with malware or any attacks from the outside. Okay? You need to buy the relevant classes and just put it on, okay? It's all about the money, okay? Don't forget it. The same goes with the DAX, with the expression of data. Here is Power BI that you can generate from the data. Is presenting a table with generative AI, okay? I'm showing you one of the latest working. Let's see. I'm gonna lower the sound, but basically, this is for another specialist, which is very interested about public cloud. This was one of the biggest announcements in Build last May. Basically, it's built up in your Azure account, okay? An OpenAI process as you see fit. You don't need to get an off-the-shelf solution or product. You can run it by yourself. You can build the flows and you can adjust it to the tool for a white labeling to a bank or to sell it in Mexico like they did it here in the last session, etc. Okay? As you can see here, we have the ability of the chat, as we all know from ChatGPT. You can give them instructions and it will create a flow with relevant for your product or for your project. Okay? This is some of the partners who are already using plugins from OpenAI, and the list is getting bigger and bigger every day. I might say that Microsoft is working with, I'm working as a 100% partner-led business, okay? I always bring a partner to the table, and I will give the instruction, I will help with the funding, but eventually the partner will lead you to the promised land with OpenAI, okay? So it's really important to know what the other partners are doing, how to maybe to learn from others and to facilitate projects. I mentioned Azure Studio before, okay, the AI, Azure AI Studio before. This is the capabilities that we have. I think the most important one is the creative prompt, okay? You can choose which prompt to produce and which prompt to deploy. I tell you that right now we see in the market that many people are shifting from coding to prompting. It's a job, okay? With our access system, we see partners, lots of people that are building the next prompt for the project of their own end customer. So it's a thing. I'm gonna skip that one because I want to get ahead, but this is something that I really like to show you. This is from last build. Let's see if it's working. Okay. Basically, the presenter shows here that he's looking for a cake that he likes in Edge. Okay. And he sees that and he opened up the big chat like in ChatGPT, but it's secured. And he asks them, okay, dude, this cake, how can I make it? So we get the recipe, but it's not stops here. The next phase he's gonna do is gonna ask, okay, how can I be able to start this recipe to get delivered? Now, I want you to stop here and think about the business of fintech, okay? Let's say that this is IKEA and I'm looking to buy a couch and I'm not closing the deal because I don't have enough money. What if an offer for a loan will pop up here, okay? Just a thought. To take it to the next level. The next example is auto underwriting an agreement under the under the California state law, etc. We're not gonna stay with it. I will go through wrapping up the session in a few minutes, but it's really important to talk about the safety. Okay, everyone fears about the rise of Skynet. Okay, that will be doomed. The robots will kill us, etc. Microsoft put a lot of effort regarding the judiciary point of view and the tech and operating point of view to make sure that it is safe. Okay, we're doing testing, like you're gonna deploy a workflow. The workflow will be tested by the tool within Azure when you're gonna do it. Okay, before you're putting it out. We're gonna make sure that we'll prevent this. Okay, we're gonna show and tell you what's gonna be deployed later. Okay, you will know at every point of the way what's going to be deployed. So, everyone knows Oprah. Okay, so everybody talking about Copilot. Okay, Copilot is the next step thing with Microsoft, which means that this is the deployment of an OpenAI in every one of the projects. So we have Copilot for security, we have Copilot for Office, we have Copilot within Office for some of the product, and we have Copilot for data. Okay, so it's all about let's get Copilot for everyone. I'm not going to stop with this one. I just want to show you an example of the generation itself. Okay, this is an example of a call center. Let's say that I'm receiving a call as a front desk call center employee, and I speak with the customer, and you tell me like I'm not satisfied with that, I want to join that, etc. The call is being documented as we go, and in the end of it, a JSON file is produced. JSON file can be uploaded to the CRM for that matter, or to make notice to the calendar of this employee, okay, to generate an automated reply to the customer, etc. So we have lots of ways to go on. This is the implementation on CRM on Dynamics for that matter. That's what we saw on the last slide, but I'm going to push it through. Okay. As I said earlier, I'm working a lot with traditional businesses. Right now, these are the four main pillars that we're working with insurance companies and banks around the relevancy of OpenAI. It's regarding a content generation, a summarization for the content that we spoke earlier, a code generation for SQL, for Dynamics, for whatever you need. And the fourth one is the semantic search, which this is the most exciting one. Okay, let's say about underwriting process with this insurance company. Okay, I'm a new customer. They need to process me under the risk management. Right now, the semantic search can help this underwriting process to do it faster, to do it QA during it. Okay, it will not take the job of the team in the insurance company, but will make it much faster, and it will make it with as minimal gaps as possible. Okay. This is the first example here in the Israeli market. I know that everyone spoke here about the fact that Israel is a very small market, but if you will be able to land as your design partner and customer, you're in the fast track to go outside and to sell globally. So this is the first one which I read that to deploy their ChatGPT capabilities within their call center. Okay. It makes me very hungry, but I will persevere. Public cloud is all about the marketplace, okay? It's not about if I will persuade you to come and work on Azure and you will consume, let's say, $5,000 a month, it's nice. It's really cool. We really want you to help you and to work with you guys, but we want you to be the hyperscaler of Microsoft, of Azure, which means that you will develop the white labeling product that will be sold to an insurance company in Mexico, to a payments company in Japan, or as an add-on for the loans and payments for IKEA, for that matter, as we saw in the first example. So basically, we are inviting you to take a big chunk out of this proportion and to help us to catch the market. This is the basic traditional relationship between a vendor and a customer. On the left side, you see the traditional one. I'm sending you Dynamics, I'm sending you 365, I'm sending you Azure, and you're buying that. You develop, and then you're selling it to the end customer. Eventually, hopefully, we'll be here, okay, as a shared partner. Okay, we're going to push you to sell with us on our platform for your customers. I'm going forward. This is one of the most interesting facts that I learned when I prepared this presentation. I'm speaking a lot with CIOs, IT managers, procurement of the IT department, etc. In the past, let's say 3 to 4 years, we're going to see a shift, and we are already seeing a shift to other decision makers. We're seeing it in marketing, we're seeing it in CFO, we're seeing it in the COO, and we're seeing it in the customer relationship department. Okay, so the decision of purchasing SaaS or deployment on cloud is no longer stays in the IT department. It's getting outside. So I want you to contemplate about it and to think about how to start with it and take it to the next level. Okay. Many customers ask us about the fairness of OpenAI, about does my information get outside? Can someone steal my IP? Can someone steal my customer's data? So the answer is no. While you are deploying an Azure AI on Azure account means that you're controlling the data and you're controlling the action. So we give a pledge to fairness, to extendable, wow, it's a very, very tough word, explainability, which means that we'll give you the right direction and we're going to show you what's going to happen if you deploy this action or the other, and etc. So if someone wants to take a picture, now is the time. It's a very, very important slide for you for the future business holding. Everyone heard about FunderSoft in Microsoft? No, okay. FunderSoft, one of the most prestigious program fund startups in their early stage. Eventually it will scale up to around 150K US dollars with credit, with tools, with GitHub Copilot if needed. So I urge you to try and to get into the program. It will launch you ahead, not because of the fund only, but because of the business development end of the game and helping you to get inside the marketplace of Microsoft. Okay, so that's it. We managed through until the end. So guys, don't hesitate to DM me. You can reach me here with the QR code. Please ask questions afterwards. We're here to help and support the ecosystem. You're really, really important to us. And thank you for listening.
Thank you very much, Ben. Very helpful. And so, where's my? Okay, our next session, we're gonna have a keynote by Ariel Zikarin, the CEO of Analytics, and we're gonna keep the discussion around AI and how technology helps us. But this time on credit decision. So what's going to happen in credit decisioning and okay, so going to ask you again just to try the for silent and we're going to move forward. Here you go. Thank you, Tom. Yeah, you have a picture right after opening night. I'm gonna help you choose people, by the way. Guys, one of the questions. One question. First, why lenders in AI for underwriting? I think there are three main reasons why lenders use AI. First, it's automation. In the cloud competitive market, lenders are required to make faster decisions with less resources. Secondly, is optimization. Every lender improves, reduce the default rate and increase the approval rate. The view the default rate and approve the third is normalization. Why normalization? The outcome of an AI algorithm between not just an yes or no condition, but a type of order for each customer. Finding the terms, the pricing, the feature, then the product, according to the goal profile, specialist, and his expected test. Tell you around the world, some markets that are regulated, and some that are less regulated. See how AI was implemented, what are the risks, and what are the first we will discuss about the Chinese market. In each country, there is kind of regulation similar to GDPR with different names. But in China, the privacy regulation is much more lax. Lenders are able to share data, in a more easily way.
The first one to take advantage of it for the bill lender. Years ago, that they use advanced AI and goes extremely well. But after 2 years, they give many different in this area. Probably a lot of investors with inflicting weaknesses. The next one to take advantage of this environment were the super apps. Super apps like AdPay, widget. They figure from the user advanced data and they develop top-notch algorithms. At some time, less banks and measure retail and secure lending. In the last few years, regulators didn't like it so much, mainly because of political issues. Most of the banks are owned by the government. They don't like the super apps. Now they are putting in place. A second example is regarding Sub-Saharan Africa, Kenyan Nanonet. M-Pesa became a mobile wallet and financial platform. 80% of the population is underbanked. This means they lack access to a credit card or a banking loan. Therefore, the demand for credit is huge. M-Pesa amassed vast amounts of data, daily transactional data. They are trying to monetize it, selling this data to them. One to 12 weeks, a small ticket, $1 to $1 loans. Due to the short amount and the short small ticket and short terms, it's very easy for lenders to reach, relatively easy, to reach and disperse $100,000 loans and develop quite advanced AI. And that was exactly what the many fintech startups did. They tried to solve the financial inclusion problem, leveraging advanced AI. They focus on new to credit young with limited financial literacy. But most of these lenders have not conducted appropriate affordability tests. The result was many borrowers used the nano loans for stock lending and defaulted loans. That case study is UK SME lenders. The English regulators did a great job leveling the playing field, enabling any lender access to vast data sources such as open banking, private and commercial credit bureau, credit registry, and more. Heavy fines were given to lenders that don't comply with affordability checks, mostly paid by lenders. Also, the FCA published an excellent work that highlights the AI opportunities and risks for financial institutions. This advanced regulatory framework facilitated the entry of fintech startups and new innovative players to the market. Many of the players are too small and lack the data and the talent to develop advanced algorithms. But still, their market share is constantly. So we can define lenders as 4 levels of credit automation. The third level is semi-automation. Credit algorithms are used as a recommendation for risk officer. This is very popular commercially. Very common. The second level is partial automation, mostly for small lenders. They use models, but these models will be calibrated by human analysis. The third level is high automation. Machine learning give recommendations to improve the models, but these recommendations will be approved by a human expert to make sure that these changes make sense. The fourth level of credit automation, some automation, will be AI, everything, there will be no human intervention. based on our experience, I'm not aware of any Western lender that is using full automation. Large banks have huge amount of data, but are quite conservative and limited by regulation. FinTech startups are more innovative, but usually have smaller portfolios with limited data, especially of a full lending cycle. I think the Chinese lenders are the most advanced. It's not so easy to share get their best practices, experience, but I suspect that the super apps, mostly Alipay, are the global leaders implementing credit AI. Some players in Southeast Asia are trying to replicate super apps model and develop similar capabilities. But I believe that in the long term, most of the regulated lenders will reach partial or high regulation, depending on the credit portfolio size. So after we understand the automation issues, we believe that the credit AI can be controlled by humans in several ways. First, the credit expert should define the institution risk appetite as an input to the algorithms. Okay. Secondly, humans should define overrides where business rules should override the algorithm's recommendation. In addition, credit expert would monitor the credit portfolio, see changes and surprises. And last, backtesting is done periodically to make sure models are in line with expectations. So, some takeaways. Using AI, the result image for consumer as well as for the audience. Therefore, credit AI be controlled by lenders and integrated. Low default portfolio lenders, such as commercial and small lenders, are slower to adopt AI due to the data constraints. We believe regulators limit the full automation adoption and require lenders to be compliant with fair, responsible lending. Credit experts are still required to test, override, and monitor credit algorithms. So I believe that AI saving credit underwriters will be in high demand in the near future. About paralytics, we are headquarters in Tel Aviv, 2 blocks from here. Our solution was implemented across 21 countries. We support more than 20 million credit decisions per year, collaborating with more than 50 lenders. We will be happy to answer any questions regarding migration. Thank you very much.
Thank you very much. Thank you, Ariel. So we don't have much content left. We have 2 parts. One is very crucial and interesting one, which is our next panel, which will focus on fintech investment. So here we leave the panel, and we'll have all leads, our leads, to see you. Our new global head of external innovation and venture investment city. We have Robbie Yilkovich. Robbie is a seasoned fintech investor and a very good partner of FinTech-Aviv for many years. And we have Tal Ekroni. Tal is the CEO and co-founder of Better. If you haven't heard about Better, just write it Better, and then they'll remarket and you're doing phenomenal in a good way. So great to have you all here. Take it away.
Thank you, Tal. Okay. And the ones who joined, you're welcome to get closer if you want to be with us here. We have a very interesting panel discussion with great panelists. Hi guys, how are you? Maybe before we start, we go around the table to introduce yourself. Please go ahead.
Israel, as well as all the triggers for our innovation labs.
Thanks for joining.
I'm chairman of a fintech company called Fly Money and CEO of a company called Better. We run CFM solution for Israelis.
Hi, good afternoon, everybody. I'm Robbie Hiltovitz. I'm a private investor, been investing in FinTech for nearly 15 years now, which is one of the four FinTech within FinTech. Private capital engine investor, put up the Series A, sometimes think Series B as well.
Thank you, Robbie. Onit, maybe we'll start with you. As a veteran corporate investor from Citi, maybe we'll hear you out about the latest FinTech trends. How do you see them and how do you see them evolve in the future?
So it's not no great secret that FinTech see every year, right? So a little bit of a slump year. If you look at the numbers, they're not that bad. They're not much worse than 2019, which was a good year. So I don't think we need to try over how bad the situation is yet, but certainly slower than some previous years. We're also seeing very big difference in the types of fintechs that are coming to us and or that we're willing to lead the industry, we're willing to invest in. It's a very cool year for companies that just let out many assets that people don't really want to get out loan, business rates aren't great, business models are shaky, so I think that might just slightly getting harder. But on the other side, all the data-driven fintechs like which our CFO stack is thriving. So I think it's more a question of finding the right fintechs versus normal fintechs.
Yeah, would you agree? Anything to add on top of this, Robbie?
So I think that's a very positive, optimistic view of the last couple of years. Certainly, the last 2 years up to a few months ago have been pretty brutal in general in this stage, but in FinTech in particular. Any company that is built on the idea that there'll be more funding rounds and capital is free and there's lots of money out there, have been absolutely decimated. The only good news, I guess, is all you have to do is survive to the Europe. Right? So any companies that are service stage companies that are still around, there's still some capital. The plane is much free open. The survival power, you end up with one of the few animals in the bush that there's more food for you and there's better chances, there's more water. I think if you did manage to survive, and at this point you've got a real business, the future is looking quite good from there. There's a lot there to be done.
Thank you very much, Robbie. And Tal, from your perspective as an entrepreneur that just recently raised money for Better for his company, maybe you'll tell us what you see out there. Who are the most active investor types that we can approach as entrepreneurs?
Right. So it's only angel investors. Okay. So it's only angel investors. That's what worked for us. We've raised a seed round of 1.5 and then additional debt of 1.5. We are a very different company in that sense because we strive to get to break even as fast as possible, and we did it in less than 12 months. So it opened and unlocked additional investors as well, like corporate investors and other types of them. But VC is really not where we go right now to raise funds.
Thanks for that. And Ori, maybe back to you. Maybe we'll hear a bit of success stories from what you saw. You were veteran investors, you have a massive portfolio with Citi Ventures. Can you tell us a bit of the success story you saw recently?
Recently, now you're making it a lot more difficult. We'll remove the word, the companies are getting acquired now. There are success stories around there's acquisitions, there's M&A happening on costs. Little to no IPOs. Just be careful here. I think it was one, and they said it was the first IPO, and then I looked at what it was doing, and some restaurant, something or other, not really anything in our space. So, we could safely say that success stories right now are in the M&A space. And we can also safely say that the M&As are much, much smaller than they were a year or two or 3 years ago. So there's no success stories, and if you got in early enough, you could still make good money or get out of things that are, good to get out of, whatever it may be. If you take it a little further, so for us, we made a bet on Honeybook back in 2019. And Honeybook at the time was a small company. People said, how is that even FinTech? But they were embedded fintech at its best. They were making payments for freelancers. And rolling forward, the company's growing tremendously, doing phenomenally well. So, you know, they haven't raised money recently because they have a decade worth of runway, which is a great place to be in, right? In a time like this, sitting on a mountain of money, what more could they ask for? But they're growing really nicely. So I don't care what their current valuation is. They'll be a success story.
It is a success story. Romy, in your portfolio, we can find Mambu, Gregorex, Hydrogen, any other success stories we should be okay?
So, again, the last couple of years, just to survive and be a success, there are a few companies that have raised money in the last year or so. One in the UK, Money Hub, in South Africa, and Yoko raised money. Really in the teeth of the meltdown, which was good. And it's because they had real business, they had real revenues, they had real cash flows, they were selling real products to real people, just here. And the other company that survived, the strategy that survived, was ready to just, use to get to profitability through cash burn, whatever it takes. So these things are always painful. But the alternative is worse, right? The alternative is you lose the company, or you end up having to take money and the other end of the cow, you basically don't the business anymore. You see your shareholders running the business and your employees. So those are the strategies. The ones that are real businesses were able to raise them, and there were one or two that also pulled back the spending, the cash to cash burns low, that were just under balance.
Thanks for that. Romy and Tal, maybe from your point of view as a serial entrepreneur, and what do you think are the KPIs for successful fundraising for a fintech company?
So at the moment, it's solely focused on revenue. Okay, so again, that's from my perspective, that's what we see out there when meeting with investors. The more we are focused on revenues, and we've practically had to put the only focus there. So we cut R&D, we cut so many other things that could help us in the long term in order to get to the bottom result in the short term. In 5 months, we practically 5 times multiply our revenues. So that's really what helped us get the round done, and revenues is the only thing. Obviously, there are the factors of unit economics, LTV CAC, and everything around it. However, right now it's revenue and revenues only.
Thanks, Tal. Oni, back to you. And from your point of view, you of course very busy.
So we're in the midst of closing around now that has made that revenue. I think they have a big story of where they're headed. They don't have high burn, and we have patience to see through that and bring them to the next place. So first of all, kudos 5X, hats off to you. I'm not taking any credit away from that, but I don't want you guys to go away with the thought that it will become, like a 7-Eleven, right? You need to bring in cash now, and we don't care about anything else. The bigger story, the depth of the tech stack, etc., still matter. And hopefully, I hope many investors will still care about that, because otherwise, I perceive this going a lot longer into the troubled times where, if you don't invest in R&D, you're going to get in trouble eventually. So 5 days, you're going to have the money to invest in. I don't know about you, but for a general statement, I would.
Okay, and this agreement. And we can still. But I want to ask you, from your perspective as a corporate investor, how do you track the latest trends? Do you make sure to invest in the right companies?
So we do. Say we do three main things. One is we read a lot, right? Constantly checking all the reports that we're seeing everywhere. The second thing we're doing is we're meeting endless amounts of people, whether it's investors, whether it's startups, whether it's other corporates, in a variety of business fields that try to constantly learn. And the third thing we're doing is we're constantly talking to our business. As a CVC, we have the luck to be very tied into our business and to be able to understand where things are headed. And hopefully not just, the Horizon 1, but also look at Horizon 2 and 3 and try to run the business from the investment perspective and make sure that we stay on the right side of the street.
Thanks, so next, Robert, we'll hear you out. What are the latest fintech trends? What investors are currently looking for?
So, first of all, just to weigh in on this discussion, I'm afraid I'll go top, even stronger, not just revenue, just cash flow. You know, you need to get a bit of a visionary to become cash flow positive if they want, obviously, but you want us to get a very clear path to profitability. Much more than in the olden days when you can wait to sell our data or we're going to change behavior. You know, I see decks that say change behavior. You don't even going to change behavior. But you can take a behavior and make it faster, more efficient, better, help. But to change behavior, to change the way people interact and do finance, people have been finance for thousands of years. There isn't a luxury today, there isn't capital today to change behavior. In terms of what I'm seeing a lot of infrastructure. So in Europe, specifically in the UK, open banking, finance, that's very exciting. That's very interesting. US is more kind of more the same. A lot of banking. It's interesting. I've seen far less financial advisory, robo-advisory, and all that. Of course, in the 5 to 6 years ago, everything that moved was something in mind. It was personally in mind. Far less. There's a far more core infrastructure out there, which for a start is very difficult, right? Because it takes a lot of capital all the time. But certainly there are. I'm starting to see, you know, I have a buzzword count, right? So if I, first couple of pages of the deck, I count the number of buzzwords and more than 5, I think it was really real, I was suspicious. Of course, everyone's now talking about blockchain anymore, they're talking about AI. So,
Web3.
No, Web3 is already done. Web2 is already but really core, core infrastructure is probably what's interesting now.
Thanks for that. Anything to add? Any thought? What do you see out there in terms of fintech trends?
So the only thing I would add is the CFO stack that Israel leading the charge on that one. There's tons of chats happening in that space. I don't disagree, it's still somewhat in that infrastructural side of things that you're mentioning, but there's so much of it happening right now in Israel.
Tal, any advice for the entrepreneurs in the audience? How to make a successful fundraising in the company?
Right, so I would focus again on revenue, and I would again go with, if you start now with the aviation, dump the presentation, go for a self-funded MVP, launch this, start iterating very, very quickly and show a boost of growth in revenues over time. Really dump the presentations, okay? Really, right now, I don't see that as too much of a relevance for early stage startups, at least in pre-seed and seed. Let the numbers talk, and only then you can go and dream big and raise more money. That's my point of view at the moment in the current macroeconomic.
Interesting point of view about the presentation. Friends and family still out?
Well, if you have to, right? But
What do you recommend?
yeah, but not highly recommended. However, obviously, angel investors are our way to go, and we raised the seed round only from angel investors. There's no VC that for us was really a waste of time. I've wasted too much time, not a lot of time, but still too much time. With VCs at the moment, they cannot invest in the rates we have been used to in the past several years. So for us, specifically, it wasn't really helpful.
Thanks for that. Before we wrap it up, how do you see the future of fintech? In short term, yeah, it's a black hole, right? But mid-range, long term, what can we expect in terms of technologies, in terms of the market recovery? What do you think?
So let me go deep into generative AI. There was a panel, you mentioned AI, very speaking, we have to talk about it now, right? So certainly, I think that is an interesting trend. It's a technology that's going to open many opportunities or not. There's a lot of pushback on the one hand from the regulator in terms of explainability and causality and so on and so forth. In terms of accuracy, let's not discuss that. But putting all of that aside, we also understand there's a lot of potential and a lot of different business cases that could apply for many different areas within. So I think that's going to be a big change. I think no secret that a lot of the large corporates are moving into different types of financial services. So I think the consumer side of the business is going to be very different or continue to change towards different types of embedded finance services offered by seemingly non-financial institutions upfront, with a lot of cooperation and backup by the financial institutions. And I think on the corporate side, which is something that we very rarely discuss, but it's the biggest part of banking, right? The non-consumer side of things. I think there we're going to see a lot more of the transformation, digitization, automation, and so on and so forth. So for now, and you asked about 2050 when you sent the question. 2050, oh my Lord, I don't know. But 2030, I think those are.
Yeah, I agree. And I even heard recently about buy now, pay later for the SMEs.
Correct.
And that's something new that I heard of. It's really the corporate income. Which company?
The British company.
Okay, cool. Anything to add on top of this? Future of FinTech?
I think FinTech has fundamentally changed over the last 2 years. I mean, it's changed it always coming, but the repricing of capital accelerated it. You know, great businesses are built when capital is correctly priced. When capital is too cheap, we end up building garbage and all sort of that. But really, the 10 years before, everything was new. Payments was new, online banking was new, online financial advising was new. Now, and you don't want to say it's nothing new because it's always new things, but it's now a far more mature function. There's going to be taking things that already exist and finding a better, faster, cheaper, more profitable way of doing it. The fundamental shift in any industry. So I think also the type of investing is going to change because really the consumers of those types of businesses are tend to be more corporates. Right? To try and build it, as you see FinTech now from scratch, you're competing with very well funded incumbents that have lasted. It's hard. I'm not saying it's done, but it's hard. So I think there's been a fundamental change. I think that is the future, further maturing of the industry, and becoming far more grown up and corporate.
Thank you, Robert.
So since we are building a digital family office for the masses, I would go with open finance, right? So that's the next revolution that we are seeing specifically in Europe and in Israel and in Asia. We see a lot of activity there, both on the infrastructure side, but also on eventually the direct-to-consumer various communication methods. That's what we're seeing as the big next boom. And that's really in the reverse correlation to the market going down right now, because people are searching for these types of solutions for them.
You know, looking forward to FinTech market recovery anytime soon. Thank you very much, Ornit, Tal, Robbie, for being with me and for joining us. Thank you very much.
Okay, so we are almost done. We have our last panel right now, talking about IP rights in FinTech. So for this session, fireside chat, with a good friend of mine, Mr. Eddie Davdansky for HFN. Please, Eddie, join me. It's working. Okay, join me, Eddie. So, really, I encourage the audience to be with us. You can step forward if you want. We'd be happy to with you on this one. So, Eddie, before we start, maybe you'll present yourself real quick to the audience.
So my name is Eddie Davdansky. I'm associate at the Health of Portland. for almost 7 years. We focus on IP litigation, intellectual property litigation, and also commercial issues, but mainly intellectual property litigation. So I think to think about all that. Thank you.
Thank you very much, Eddie. Thanks. Great to have you with us. And let's talk about IP in FinTech. How does intellectual property protection play a crucial role in the FinTech industry? What's the importance of the IP protection? How do you see it?
So basically, like every tech industry, FinTech industry, the technology is in fact IP. The product of the company is the main asset is IP. So it has crucial parts in this. When it comes to investors, when we get to transactions from our perspective of law, of IP law, when transactions, the investors wish to clearly identify what is the IP of the company and to make sure that the IP belongs to the company and it is undisputed among its contractors, employees, etc.
Okay, thanks for that. And what are the key considerations for FinTech companies when it comes to protecting and securing their IP assets? How do you see that?
So since we are dealing with mainly software and other elements such as the graphic elements, HTML, architecture, it's really hard to obtain a registered patent in the last year. So our discussion is mainly about copyrights and trade secrets on one hand, and trademarks on the other hand. So unlike that, separately in the United States, copyrights are not registered rights, trade secrets as well. So how they are created? So copyrights are being created upon the creation of the work, upon the creation of a code or other work. And also the trade secret, one confidential information that provides the company some sort of benefit is being created, it is a trade secret. The question is who these IP assets belong to. And so the easy example with the Israeli copyright law is that in the employment relationship, the law sets out a default according which the employer is the owner of every work made by an employee. However, in the contractor and client relationship, the picture is different. The default is absurd, in my opinion, that the contractor is the owner of a work for hire, unless the parties set out in an agreement or written the opposite. Now, this default creates a lot of disputes and litigation at the latter stage of companies that in their beginning didn't set out contractual arrangements between the partners. For example, in many cases, a startup starts without even a legal entity existing. Several partners are working, one is the developer, the other one brings the money, the third is doing marketing, and they work without an agreement, without anything. The time comes and they should not successful, they have a dispute, they have other business opportunities, and the question is to who the work developed by the developer. So the default is to the developer, but it is fair. The best way to secure assets is to arrange from day one, sign contract between the partners, employees, contractors. This is one aspect. The other one is the trademark. Like every business, eventually you transmit your services to your name, to your brand. So the first step that we always advise clients to do is simply check, even before you secure your own right, secure the position that you won't be subject to third-party claims of you infringing a prior trademark. So this is one. Then, of course, register your trademark, so it will be easier to enforce it upon infringement by a competitor.
Thanks very much. Maybe we'll use a few examples. You can share a few case studies of IP strategy in the fintech industry and its implications, the way forward.
So I'll give, I cannot, of course, expose any names due to client early relationship. So one company, we represent one of the largest companies in the world in the fintech industry. This company is a good example of how it was arranged from the beginning. Everything is set with the agreement and everything. The company raises the claims towards its ex-senior officers, senior development staff. And we are in a really good position due to this agreement signed in the early stage. The second example is an insurtech company that we represent, very successful one, but it's a good example of bad conduct in the beginning. One of the first developers of the company worked first as a contractor, without a written agreement whatsoever. He received a lot of money from the company. And then at the last stage, they had a fight, he had a fight with the founders, and he left the company. The company is worth hundreds of millions of dollars, and today, not today, 2 years ago, it's still ongoing, filed a claim against the company, demanding 25% of the shares, arguing that the founders promised him already that he will be their equal partner. And this is the good example of how a short one-page agreement would save this very costly litigation proceeding that we don't know how it will end. That's
I guess there are so many examples, but we talked today so many times about generative AI. And I think that it will be interesting for the audience as well to understand what are the main risks in terms of IP risks when using generative AI for startups.
So I guess I'm just loyal if the audience here understands the technology much better than me, but everyone knows that we are facing now one of the most significant breakthroughs, technological breakthroughs in the human history. So of course that the law is does not keep up with the pace of the technology, but we expect a major dramatic legislation in the following years. But right now, as we see, there are two major risks in using generative AI for creation of a, let's say, platform of a fintech company. One risk is you expose yourself to third-party arguments and claims of the infringement of the intellectual property rights, such as copyright, trade secrets, maybe, and the privacy rights. Why? Because the machine, let's say you have some engine, AI engine, to create something for your platform that involves code. You don't know where the machine takes its data from, the materials from. It may take portions of, let's say, open source code with a restrictive license, and put it in within your product, and you are exposed to third party claims. The second danger, which is not really a risk, it's a risk. The US Copyright Office now issued a statement of the policy statement according which, and I think that many countries will follow the United States, IP generated, copyrights generated by Mashkir will not be registered, will not be acknowledged as protected copyrighted works. And Copyright Act intended to secure and protect human creativity and not machine creativity. Now, again, that's risk. So if you order your platform entirely or partially through machine work, you will not be able to enforce your IP rights if they are infringed. That's it. It's really early. We expect, as I said, a substantial involvement in this area.
Do you think the Israeli regulator will follow and will act as the US regulator?
I'm not sure. There is regarding the Ministry of Justice issued a memorandum also recently regarding use of AI. It's the first point that they mentioned. Use of AI. It's not binding, non-binding. Use of AI for the purpose of machine learning. They are in the opinion that it should be considered as fair use and not as copyright infringement, but non-binding and does not address the situation of creation of a platform for commercial use.
Super fascinating area, undoubtedly. And before we wrap it up, if you have one piece of advice to the entrepreneurs in the room, what will it be?
Give me a call or your lawyer before you act and take some advice.
Benny, thank you very much for being with us. Appreciate your insight. Okay, so thank you very much for joining us. We're wrapping this up. It was a great pleasure hosting the summer summit of FinTech-Aviv. We have some pieces and snacks here, so you're welcome to network and introduce one another and join us.